What we can see here from the daily time frame, we can see that we have a bearish order block. So you can see within the rejection block in this lower time frame now, which is a daily time frame, because you know the weekly time frame is higher than the daily time frame. We have this bearish order block, and now we can see price reacting there. And what clearly you can see is price gave us a rejection to the downside, meaning price is respecting the mean threshold of this daily bearish order block. So basically now what we need to identify is the possibility of price reaction to the downside, because in the daily time frame now we can see price reacting at the daily bearish order block. So clearly now we need to identify the zone that price would want to dip lower before continuing bullish to the upside. And what we can see is we have this draw on liquidity, which is the sell side liquidity here in the daily time frame. So we can identify this as the draw on liquidity because that is a valid pullback. You know, I taught you guys how to identify the valid pullback because we can see price dip to the downside and took out the low of this bullish colored candle. And below our sell side liquidity, we can clearly see we have this fair value gap. So we have the fair value gap here. So we need to also identify that. So you can see we have the fair value gap here in the daily time frame. So what we are clearly seeing from the daily perspective is that price is respecting the bearish daily order block, because here we can see that price is respecting the mean threshold of the bearish order block, and we're seeing the possibility of the rejection of price to the downside before we have the bullish continuation. Now we've identified the next draw on liquidity, which is the sell side liquidity, and below the swing low we have the fair value gap. So basically what I'll be looking forward to is how price would dip to the downside into the fair value gap, sweeping the sell side liquidity, and we have the bullish continuation to the upside because the weekly external buy side liquidity is our draw on liquidity. So what we can now do is, since I'm coming from the perspective of a top-down analysis, we can now go to the 4-hour time frame. So let's go to the 4-hour time frame. So what we can now clearly see in the 4-hour time frame is the reaction of price to the downside here, because we can clearly see price has given us a single candle order block here, because we can see that this bullish colored candle took out the high of this candle. We have volume closing below that. Next we have this bearish colored candle taking out this high and volume closing down below this bullish colored candle low. So we have that possibility of having the bearish movement to the downside, since we can see price reacting at the daily bearish order block. So also from the 4-hour time frame, we can clearly see that the zone we identify as the sell side liquidity from the daily time frame is giving us this valid pullback in the 4-hour time frame. So you know, from the daily time frame you can just go to the 1-hour time frame and begin to frame your entry zones. But for me, I love to conduct a top-down analysis, an intense top-down analysis, so that I'll be able to establish strong confluences to really know the zone to look into for my trade executions. Because what we must understand is, when we identify most times fair value gaps in a higher time frame, when we drop to a time frame lower, you would see the possibility of identifying an order block within that fair value gap zone. And clearly here in the 4-hour time frame, we can see we have this order block within the daily time frame fair value gap. This is the sell side liquidity, which is now going to serve as the next draw on liquidity before we have the bullish continuation to the weekly buy side draw on liquidity, which is the external draw on liquidity, since we know that we are in a bullish market condition. So clearly now from the 4-hour time frame within the daily fair value gap, we can see we have this bullish order block. And below the sell side liquidity, we also identify from the daily time frame, we can see that we have this fair value gap within the daily time frame fair value gap, where we can find also the bullish order block in the 4-hour time frame. So we can see we have this fair value gap also. So you can see how I tend to establish zones that tend to hold price. At times you just see lines on the chart when I'm sharing setups in the free Telegram community. So from the 4 hour time frame, clearly also from the 4 hour time frame, this is our sell side liquidity. So what you can now do next is to go to the 1 hour time frame. So here from the 1 hour time frame, we can see that within the zone, which is the daily fair value gap zone, the daily bullish fair value gap zone, which we identify an order block in the 4 hour time frame. What you can see in the 1 hour time frame is that we have this institutional order flow, the sell move before the bullish movement to the upside. So you can see we had this pullback to the downside, which is the ideal sell side liquidity from the 4 hour time frame and also the daily time frame. And in the previous session, in the draw on liquidity session, I told us that there are times we can see price will take out a lower time frame draw on liquidity, either the sell side liquidity or the buy side liquidity, and then we have the trend continuation. Or we could see price would now take out the lower time frame, draw on liquidity, and give us a reaction, just a little push in the trend direction. But then we can see price would now violate and return to seek the higher time frame ideal draw on liquidity. So what we can see from the 1 hour time frame is we can clearly see we have this trend line liquidity here. Let's clearly identify that. So we can identify trend line liquidity here, and we can see how price returns seek those trend line liquidity. So giving this as higher low point from the 1 hour time frame. But from the 4 hour time frame, this is a sell side liquidity, because let's go to the 4 hour time frame, because you can see this is where the pullback happened. And let's go to the daily time frame. You can see from the daily time frame, you can clearly see this is the pullback to the downside. So let's allow this to just appear in the hourly time frames. We don't want to see that in the higher time frames. So let's have that. So let's go back to the 4 hour time frame. So this is our drawn liquidity. So this is a trend line liquidity from the 1 hour time frame, which price cleared all the liquidities, and then we had the push to the upside. So from the 1 hour time frame, we could see the possibility that now we have this bullish impulse, we have this break of structure from the 1 hour time frame. So clearly now what you can see from the 1 hour time frame, we have this sell side liquidity, because this is a valid pullback to the downside. So we have that sell side liquidity, price gave this impulse, we had another pullback, and now we have another inducement liquidity here. So clearly now we have this inducement liquidity again. So this becomes the engineered liquidity, because this is a pullback before the break of this high point. And now we have this pullback again to the downside, because this candle created the highest high point, price pullback against it, and then we had this bullish push to the upside. So we could see now we have draws on liquidity is this sell side liquidity. You can see this fair value gap, and in extension we also have this engineered liquidity, which also below that we can see clearly that we have a fair value gap there. So let's mark out that fair value gap. So this is also a setup I shared when I conducted the analysis for gold, and I think I shared the trade entry which was not activated. It was a pending order I set, and price did not really activated, because I think I worked with this down close candle before this bullish movement. So the order was here, but then price respected the fair value gap, and we had the bullish push of price to the upside. So basically this means when you're going to take a position here, you know that this is the 1 hour sell side liquidity. We also have the sell side liquidity, but then from the higher time frame we've established the next draw on liquidity to the downside, which is a sell side liquidity, and this is that sell side liquidity. So it means when you're trading the 1 hour time frame, you want to look at a sponsorship zone, a close by sponsorship zone that price may react at, and then continue bearish to the downside to take out the higher time frame sell side liquidity before the ideal bullish movement to the upside. Are you getting it? Are we together? So what we can now clearly see, you could just set your pending order, a long position at this fair value gap here. We can have that here. The stop loss below the wick of the candle that sponsored the fair value gap. So what we can now see is you could look forward to targets this bearish order block created here as the target when we see the return of price to the downside, or you could work with the order flow. So let's consider the low of the order flow, which is this candle low point, because this is where we now start having the bullish reaction. So let's log that. And ideally I like to take position that is 1:3 and above. So what we can see from the internal structure here is based on the 1 hour time frame. You can clearly see we have this sweep of liquidity. Price seeked this liquidity. And what you can see is we have this change in state of delivery here. We have an ideal change in state of delivery here. So, I told you also change in state of delivery is also an entry model you need to also be putting into perspective. So, and then ideally then you can see we have the valid market structure shift, since we can see that this volume closed above the high of this bullish colored candle. So we have a valid market structure shift. So what it now means, basically the change in state of delivery is when you have an opposing movement against a sponsorship candle. Here you have a bearish order block. Price gave us the movement, and we can see the volume of this closed above the close price of the bullish candle and the open price of the bearish candle. Before we have the ideal market structure shift, where we have this volume closing above the high of this bullish colored candle. And now we have the engineered liquidity, we have the sell side liquidity, this inducement liquidity. So basically we could see the reaction of price within this zone to give us a bullish reaction to the upside. And basically now I would want to show us using a single candlestick order block, which is going to give us entry models in lower time frames. So let's play price to see what happens. Now you can see now price giving us bearish movements to the downside, and here we have the reaction of price within the fair value gap here in the 1 hour time frame. So we are trading this from the 1 hour time frame, but from the 4 hour time frame and the daily time frame, this is where we have the ideal drawn liquidity. But now what you can see from the 4 hour time frame, we have this single candle order block. This swept this low, and we can see this volume closed above this. Price return reacted and gave bullish movements. And then in the 1 hour time frame, we can see this structural formation there. You can see in the lower time frame structural formation. So what we can now see is the fall of price. So let's play price to see. Okay, price returned to the downside, activated our entry, and now we had that bullish movement to the upside. So I just wanted to show us this perspective also, how you can see draw on liquidity on the lower time frames. Also, you get it. So you can also utilize that to take a position in the direction of the trend. And we can see how price pushes to the upside into this bearish order block.